Hi everyone, welcome to another video, and in this video we are going to have a look at what is coming up in the coming week from the 31st of March 2024 to April the 6th when it comes to major high impact economic data that will be released. Please note that in this video we are going to start on Sunday, March the 31st, because that data from China is very important and will lead in terms of how the whole week could look when it comes to the forex market as well as the stock market. So starting off at China on Sunday, March 31st, the data will be released around 3:30 a.m. South African time because I'm in South Africa, and we just have to look at what is this manufacturing PMI. Obviously, we also have to check what has been happening previously. As you can see, previously for the past 6 or 7 months, China PMI manufacturing has been below the 50 mark point, which 50, anything below 50 shows that there is a contraction in the economy, meaning the manufacturing sector in China is not growing. Anything above 50 shows that there is growth in the manufacturing. And we know that in terms of economic growth, we need a strike, we need an expanding manufacturing sector. But in this case, that is not the case. However, the forecast for China manufacturing PMI is 50.1. So, whatever the number that comes out on Sunday, the 31st of March, will have a ripple effect in the US, the UK, and all the other trading partners with China. We will see that in the indices in terms of S&P 500, Nasdaq, and how the currencies will also take shape. On Monday the 1st, we also have the manufacturing PMI from the USA, and also the USA manufacturing has not been good. It has not reached above 50 mark. We can open the detail and see the previous numbers that have been released, and it's been quite a time. It's been almost a year without this sector growing above 50 point, the point that is very critical. On Tuesday, we have the German prelim CPI month on month. And of course, Germany is one of the largest countries in the European Union, so it will affect the euro. If the number comes up pretty above the forecasted value of zero point 0.4, we know that it's going to drive up the euro. If it comes below, it will drive down the euro. On the very same day at around 4 p.m. on Tuesday, we have the JOLTS job openings at the USA, and I don't normally trade this data, but I keep an eye on it, so you can also do the same. On Wednesday, it's also a USA Day. We have the ADP non-farm employment change, the ISM services PMI, as well as the Federal Chair Powell speaking. It's very important that you take note that the ADP non-farm employment change has a direct link to the NFP data that will be released on Friday, the 5th of April. So you can also trade that data. If it comes up higher than the forecasted value, it will cause the USD to increase, and you can also look at the other correlated currencies. If the USD increases, you could sell the gold and vice versa. We also have to look at Federal Chair Powell speaking. Let's look at the detail. He will be speaking at the Stanford Business Government and Society Forum. We know that the Fed Chair always, when they make speeches, we always look at what they are planning for the future. What is the future outlook in terms of interest rates, in terms of inflation, employment, so that all of that information will provide a guidance as to what we can expect in their next meeting. On Thursday, the 4th of April, we have the Switzerland CPI, one of my favorite economic data or economic indicators to trade. CPI, very important. If inflation is high, chances are there is central banks will increase the interest rates and thus driving that currency up. So it's very important to take note of that if you are trading the CHF from Switzerland. On the very same day, around 2:30 p.m., we have the unemployment claims from the US. If this number comes up high, it will drive down the US dollar. We know that the unemployment claims is the number of individuals who have filed for unemployment insurance for the first time during the past week. So it kind of indicates the level of US unemployment rate, that is recorded week by week. Very important piece of data. Finally, a very busy day for every forex trader in the world. It's basically the first Friday of every month. And in this case, it's Friday the 5th, around 2:30 p.m. South African time. We have five high impact economic data released from two countries, Canada and the United States. Let's talk about the ones that are coming out of Canada. We have the employment change and we have the unemployment rate. Employment change, basically it talks about the number of people that are employed, and we know that if there are more people employed in the economy will increase, and that will have a good effect on the currency. And we need to also remember that the GDP data that was released last week from Canada came out really good. So it shows that there is some life in the Canadian economy. So we are expecting a rather increase in terms of the employment change from Canada. When it comes to the US data, the average hourly earnings, non farm employment change, unemployment rate. Now, here is my tip. Take it or leave it. It's really up to you, but I suggest you take it. We always look at the NFP. We are always excited about trading the NFP, and we basically our world stop when we trading NFP. However, the real jinx of things is not necessarily on the NFP number itself. Let me tell you why. In general, you can employ as many people as you want, even if you are paying them less money. But if you are saying, I've employed millions of people and you are paying them poor money, or you basically employ them on contract, that is not really sustainable, is it? But if you come to me and say, well, I've created a million, or I've employed a million people, and I am paying them really well. Their average hourly earnings are very high, and I've employed them kind of for a long term contract or for permanent, right? Then that for me is a long term solution. It means that in the long term, the labor market will really be good. And when the labor market is really good, it means that consumer spending will increase, retail sales will increase, the overall GDP will increase, and the value of the currency will increase, right? So for me, the most important economic data for you to really look at in this case will be the average hourly earnings. And if this number comes out stronger or higher than a forecasted value, definitely you should know that the US dollar will appreciate. It will be very good for the US dollar. Let's check out the previous numbers that came out in the past 5 months. You see it was 0.2 in November, just below the forecasted value. The following month, 0.4, 0.4, 0.6 in Feb. It came out really nicely, 0.3 tradable trigger, and it made wonders. Last month it came at 0.1%, which was 0.1% below the forecasted value. So my advice to you on this day is to look at the average hourly earnings data, and if it corresponds with a high, or the actual number being higher than the forecasted value, then good for you. Then it means the US dollar will definitely rally, will definitely be up. Then you can buy the US dollar against another currency. You can sell the gold, and you will be right in profits. And this is just the overall of the economic indicators or the economic data that will be released in the upcoming week. If you loved the information I shared with you in this video, please don't forget to like this video and leave a comment below of future suggested improvements or suggested posts that I do on this very specific video. And I will see you in the next video. Bye.